The truth about trade lines. Peace, family. Will Roundtree here, your credit expert, author of the book Credit is King, president and founder of We Management Services, president and co-founder of Easy Funding. But more importantly, just wanted to come and drop some knowledge with you and share some important information about credit. See, there's so many misconceptions, so many myths, what's true, what's not true, and things that we just have not been taught about credit. And probably one of the most common things that a lot of people really just don't understand is the truth about trade lines. So you may be asking yourself, what are trade lines? Or you may be saying, I've heard of trade lines, not quite sure what it is. Or you may have heard the term authorized users, or one of the old school mortgage terms, piggybacking. But essentially what it is, it's where you're going to be renting someone's payment history. Let me explain how that works. So let's say you have someone who doesn't have a really, thick credit profile, meaning they have very little to no credit, and so let's say you have a family member or relative who does have good credit in the form of revolving credit cards. So essentially what that person with a great credit or who has credit cards would do would pick up the phone, contact their bank, and add you on as an authorized user, essentially meaning that whatever reporting history that coincides with that particular credit card or that credit line is now going to be reporting on your credit profile. And so what that looks like is let's say you have a credit card, or the person who you're asking to add you on as an authorized user has a Visa credit card, $10,000 credit limit, and that's 5 years old. Okay, so they're going to pick up the telephone, call the bank, and add you on as an authorized user. Now, an authorized user essentially means that they authorize you to have access to this credit line, or the terminology trade line. Okay, and essentially a trade line is just any line of credit that's reporting on your credit report. So it's more like industry jargon. Okay, so now that Visa credit card, remember, it's $10,000 limit. It's a 5-year-old card. They're going to pick up the phone, contact that bank or that servicer or that credit card company, and this only pertains to credit cards. Okay, once they pick up the phone, call them and add you on as an authorized user. There's typically a few pieces of information they're going to need to provide. They're going to need to provide your name. Some banks are going to ask for your date of birth. Some may ask for your social, not all, but the most important component is they're going to ask for your address. And that is because banks, credit card companies, credit bureaus usually authenticate you by two pieces of information, your name and address. So if they do not ask for your social, don't be alarmed. That just means that that is not one of the particular protocols that they need in order to add you to that particular credit card. So they're going to pick up the phone, as I mentioned earlier, call the bank, add you on, provide this information, and then on the statement date. And if you don't know what that means, every single credit card has a statement date. And it's usually a few days after the actual due date. And what does that look like? So let's say this credit card due date was the 15th of the month. Usually the statement date is a few days after that. So typically, let's just say the 18th of the month will be the statement date. And what that means, or why that's so important, is once they add you to this credit line, usually after the statement date, approximately sometime around there, once they update the information to the credit bureaus, and that's what the statement date means. That means when they push the information to the credit bureaus, then you will then see this credit line, this credit card reporting on your credit report. Okay, so now, why is this important to know? So there's a couple different reasons why trade lines could be beneficial. The reason I talked about the truth about trade lines, because it doesn't help in every single situation. And I'll give you an example. Okay, so now let's say you have someone who has challenged credit. You have a 500 credit score. You have 10 collection accounts. All right, maybe public record and few late payments, 5 late payments. Okay, now typically someone in this boat may be going through some type of credit repair or credit restoration, and that's okay. Okay, so now one of the biggest mistakes I see a lot of people make is they'll go and add a trade line on their credit profile at the beginning stages of the credit repair. Now, the reason it's important to understand why that's the wrong time to do so, typically if you're going to find a trade line, and a lot of times people are buying trade lines on the open market, meaning they're going to a third-party company and they're actually paying for this. Now, if you can have someone add you to their trade line at zero cost, that's fine because they can keep you on infinitely. But if you're going to go and invest and pay for this particular trade line that's $10,000 in 5 years, because then what's going to report on your credit report is an authorized trade line that's $10,000 in 5 years. So again, this information can help your credit profile. But if you go and pay for that, typically someone who is selling their trade lines generally is only going to keep you on 30 to 45 days. So now, if the average credit repair cycle, meaning how long it takes you to go through credit repair, can be anywhere from 4 to, let's say, 12 months. And that depends on the severity of your credit. I mean, we've had some clients who've gotten their credit repaired in 45 days, but every single scenario is going to be completely different. But going back to this situation, you have a 500 credit score, you have 10 collection accounts, a few public records, and some late payments. You go and pay for an authorized user or a trade line that it is commonly referred to. We know it's only going to be on there 30 to 45 days. We know the average credit repair life cycle is 4 to 12 months. If you pay for it month 1, what's going to happen in month 2 or 3? Exactly. That trade line now becomes irrelevant because you've just basically wasted your money for something that's going to be on there a short time. So if you're going to pay or invest in a trade line, I recommend that you only add it at the end of the credit repair cycle. And again, this is a very common mistake that I see a lot of people make. You want to make sure that if you're going to invest your money, that you invest it properly or you get the proper information, because adding trade lines is merely just a strategy. OK, it's not the end all be all. It doesn't mean your credit is going to be perfect forever. And it may not even help you in this particular situation. And I'll explain why. OK, so now we already identified this person has a 500 credit score. They had, 10 collection accounts, some public records, few late payments. Now, 30% of our credit score is based off of credit utilization, okay, or credit usage. So let's say this person who had the 500 credit score had a $1,000 credit card and they had a zero balance, which means they never really even used this credit card. But they went and invested in that $10,000 trade line that was 5 years old. Guess what? That trade line did nothing for their credit score whatsoever, because the trade line is only to help to lower the credit utilization. But the utilization is only based upon revolving credit cards. Now, let's take this back a little bit. What is a revolving credit card, etc.? So there's two different types of credit. You have what's called revolving credit, and then you have installment. Okay, so installment would be credit cards or department store cards. Revolving would be credit cards or department store cards. Installment credit would be something like your mortgage, your auto loan, if you have student loans, anything with a fixed payment. Revolving would be anything with a revolving payment. So just like going back with the credit card, it doesn't keep the same balance as you pay into it. It doesn't have the same payment dollar amount as you pay into the balance. And so your credit utilization is only based off of revolving credit. An authorized user or a trade line only affects your revolving credit. And so if you have a credit card that's $1,000, but you have a zero balance, adding a trade line does not help your score. So I hope you guys are following me. It does not help your score because you already have a zero balance. Which means you have a 0% credit utilization. Now, let's take the same situation, same scenario. And you had that $1,000 credit card, but this time you have a $900 balance, which then puts you at what? 90% credit utilization. So now, adding a trade line in this particular situation could be beneficial, because if you have the $10,000 credit card, which you now add to the $1,000 credit limit that you already currently have, which gives you a new limit of $11,000. Now, keep in mind, you still have the $900 balance, which in turn, that now takes your 90% credit utilization down to, let's just say, 8.5%. So now that in turn will increase your credit score, because as we identified earlier, that your credit usage makes up 30% of your score, which happens to be the second largest component of what makes up our credit score. Now, so kind of recapping, a trade line or an authorized user, whatever terminology you want to use, can only benefit you if you have a high credit utilization. If you have a low credit utilization, 0% usage on that $1,000 credit card, adding this $10,000 limit does not help your credit score. Now, another caveat in lieu of this whole particular situation. Remember, this person had the 500 credit score. They had the 10 collection accounts. They had the public record. Now, they can still go out and improve their credit utilization, but keep in mind, if they still have the 10 negative accounts, the 10 collections, the 5 late payments, they have the public record reporting. Remember, unless we identify all of the challenges that is affecting that credit score, just adding trade lines does not help you on an overall basis to improve your overall credit score, nor your overall credit profile. So the reason I wanted to point that out is because I see a lot of times people trying to, as I say, put lipstick on a pig. It's still a pig. And so essentially that's what we're doing with our credit profiles. We're adding the lipstick, which is the trade lines or the authorized user, to the stuff, the crappy stuff that's still on there. So again, just a word of advice. If you're going to go and add some trade lines or you're going through some type of credit restoration process, make sure you're still attacking the cancer in the credit report, which are the collection accounts, the late payments, the public record, and then add the trade line at the end, which is kind of like the cherry on top or the sprinkles on top of the ice cream. Is going to give you the finish for your particular credit profile. So that's one of the things that I really want to discuss and break down about trade lines and authorized users. Now let's talk about a couple different scenarios where authorized users and trade lines can be beneficial. Now, did you know you can start building your children's credit as young as 13 years old? You may ask, well, how do you do that, Will? By adding trade lines. Here's how you do it. Same thing. You have a $10,000 credit card. You have a zero balance. Now, keep in mind, there's a couple caveats in lieu when you are talking about the credit limits or when you're trying to add someone as an authorized user on a credit card, and I'll talk about that shortly. So you have a $10,000 credit card with a zero balance. The card is 5 years old. You can pick up the phone, contact your credit card company, your bank, or whoever that is. Remember, this is only beneficial for revolving credit cards. You can call the bank and add your 13-year-old child to that credit line. And as long as this card stays in good standing, by the time that child turns 18 years old, they're going to have a 700 plus credit score. As long as this card doesn't get any late payments or maxes out or it goes to collections. So this is a really good way for us to start building our children's credit. Okay, this is actually probably the best gift you can give them by the time they graduate high school and get ready for college, because credit is just something that we aren't teaching our children. This is things that we need to teach them, because typically most of us screwed up our credit when we go to college because we haven't been educated. You know the pitch. You go, they giving free pizzas and T-shirts to sign up for a credit card, but we don't know how to properly use credit or what the purpose of a credit card is for. And so by start building our children's credit at a young age, and over the years from 13 to 18, we're just educating them on the power of credit, why you want to maintain it, et cetera, et cetera. That way, by the time they go out into the real world, now mommy and daddy doesn't have to co-sign for that first vehicle. You know, we don't have to co-sign for that first apartment off campus. So we're actually empowering them. That's why it's important for us to know this information. So that's one of the ways that we can help, and how trade lines can be actually used for a benefit by helping our children build our credit or build their credit. Or another scenario is when I work with a lot of my clients who are going for some business funding. And for those who do not know what business funding is, that is where you're trying to get some capital for your company. Meaning you have a startup, you're trying to scale your business, you're trying to grow it, you need some marketing costs, inventory, whatever the case may be. Now, the reason understanding the power of trade lines can be important is because there's two major components that banks look for with your credit that it can make a determination whether they're going to lend you the money or not. And that is your age of file and your high credit limit. Meaning the average age of file that most banks are looking for is 5 years plus. Okay. The average high credit limits that they're looking for is 5,000 plus. Okay. That means the average of a $5,000 credit card. So meaning if you're one of those who say, you know, I don't believe in credit cards, but I want to go and get some funding for my business, and your highest credit limit is $1,000, you run the risk of possibly not getting much credit. And this is all pertaining to your personal credit. Okay. Your personal credit has to be strong. You have to have a good personal credit profile in order to qualify for some business funding, meaning any type of lines of credit for your business, any types of business loans, any types of business credit cards. You have to make sure that your personal credit is in position. And so in lieu of that, if you don't have the age of file, if you don't have the average high credit limit of $5,000 or plus, you can add something with you can add an authorized user or a trade line, and I'm going to be interchanging the terminology because different people call it different things, in order to help you to eclipse that 5 years of age and the high limit of $5,000. We just talked about you had a family member who has a $10,000 credit card and the card is 5 years or older. So if you become an authorized user on that credit card, guess what? You now will have a new high limit of $10,000 reporting on your credit profile. And it now has eclipsed and given you an average age of 5 years. See, so that's really just a strategy, another form of leverage, helping you to maximize your situation in order to be able to get funding for your business. Because again, your age of file and your average credit limit, high credit limit, also make a determination with your credit profile or your personal credit score in order for the bank to approve you for any type of business lines of credit, any types of business credit cards or anything like that. They don't care about your paydex score. Your personal credit makes a big, major impact. It's probably weighted over 90+% that the banks are looking for in your personal credit score. And again, that age of file and high limits also make a major impact. Now, the last thing I wanted to share is what are some of the potential pitfalls when adding in a trade line or an authorized user. So now, if you take that same person who has that $10,000 credit card and average 5 years, remember, because they made you an authorized user, now, it doesn't mean that, and keep in mind too, it doesn't mean that you have to give that person that card or you get access to the card. Essentially, you're just renting the history, okay? You're just renting the credit history. They can remove you at any time or they can keep you on forever. It's completely up to them. Now, while renting that history, that means anything that's reporting with that particular credit card will also report on your credit. So you want to make sure a couple different things. Now, we've already identified earlier that 30% of our credit score is credit usage, which means that if they max out their credit card at $10,000, it is also going to impact your credit profile or your credit score. So when it comes to an authorized user, I have a rule of thumb and say that you want to make sure that their balance is 10% or less. 10% or less. Now, if someone is gracious enough to add you on as an authorized user and you're trying to barter with them on why they should add you on, especially if it's a friend, family, or a friend or family of whoever you're talking with, I would say, or as they say, a fair exchange is not a robbery. And so, and what I mean by that is that if they do have a high balance, why don't you offer to help them pay on the balance in order to get it below 10%? That may intrigue them, or that may, want them to want to add you to their credit line. So if they do have a card that's over 10%, remember, you want to get that balance down, because anything 30% or higher is going to also impact your credit profile. And then you want to make sure they don't get any late payments or 30-day late payments, or it goes to collections. Because if they get a late payment, guess who else got a late payment? You. And so, again, it's very important to understand that if you're going to go on as an authorized user on someone else's trade line, especially if it's a close friend or a relative or a family member, offer to help them pay the credit card bill, especially if they're going to add you on without charging you a rental fee, as I call it. Okay. Now, if you're going out there on the open market and dealing with a third party company, of course, you run the risk. You want to make sure you're dealing with a reputable company who offers some clean authorized user credit cards, because remember, if they're dealing with cards or individuals who max out their credit cards, who get 30-day late payments, remember that also is going to impact your credit score. But no need to worry. If that is something that does happen, you can always pick up the phone, contact the credit bureaus, excuse me, and have them remove that from your credit profile, because the good thing about being an authorized user, you do not assume responsibility if that card was to go to collections. Whoever was the original borrower would be the one that would be responsible for any debt. Now, if the person who added you on as an authorized user gave you a card, of course, you want to make sure that if you were the one who were being irresponsible with it, that you some kind of way you guys work that out, or whatever the case may be. But I'm merely just talking in the form of strategy on the truth about trade lines, because again, I've seen a lot of people waste a lot of money on trade lines. Hopefully this information was of some value for you. Hopefully you saw the benefit of how they can be used properly. We talked about how it can help your children's credit, the reason why you may not want to purchase it at the beginning of your credit repair or credit restoration cycle. You want to add it at the end. And more importantly, when it comes to trying to get some funding for your business, how it can actually help you when it comes to getting your average age up and your high credit limits increase to be able to give you a maximum credit strength for the banks to be able to give you a proper underwriting of your credit card application, your business line of credit application, or your small business loan. So again, family, this is Will Roundtree bringing you some information about the truth about trade lines, and make sure you check out my other videos, and I'll see you guys soon. Peace.